All right. Well, let me go ahead and get us started here. So, thank you very much for joining this evening. This is the Wealth Mindset and Real Estate Investing virtual meetup. My name is Chris Price. I am the host and of the Wealth Mindset and Real Estate Investing meetup, and I'm also the CEO and co-founder of Red Fox Multifamily. And the Wealth Mindset and Real Estate Investing meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. The meetup is for the busy professional and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill set, or network to do it at speed and at scale. And so this meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as the other proven ways to build wealth through real estate, through passive investments. And then on the other side of this, guys, Red Fox Multifamily, we work with investors who are dissatisfied with the low returns from savings accounts and bonds and investors, who are concerned about the volatility of the stock market. Red Fox Multifamily puts discerning investors' capital to work for them by investing in exceptional multifamily properties in the best markets nationwide. Demand for multifamily rental units continues to grow and is driven by both the preference of certain demographics as well as unfavorable single-family home ownership options. Red Fox Multifamily is based in White Plains, New York, and we again partner with investors whom the stability of real estate investment appeals, but the stress of property ownership does not. And we give our investors the benefits of real estate investing through syndications, which, as you know, is a group investment, and we focus primarily on multifamily. So let's talk a little bit about the logistics for tonight. I will ask that you please mute your lines when you're not speaking. If you could hold the questions to the end of the presentation, please do so. But if there's something burning, please go ahead and call out. I'm happy to stop and make it a dialogue. This material, you should know, does not constitute an offer or solicitation to purchase securities, and this is information only and should not be construed as business, financial, or legal advice. But also before I get started, I want to connect with you. If you guys, for some of you, I may not know, I've not had a chance to connect with you directly yet. You're on my email list, or we've maybe exchanged on social media. Please go ahead, reach out to me and connect. You can scan the QR code, or you can reach out to me via email at chris@redfoxmultifamily.com. And so today, what I'm going to do is I'm going to go straight into the presentation, and then we'll have a little bit of time to do some Q&A, and then and then do some virtual networking and just chat a little bit if everyone is around to do that. So thank you guys again for your time, and let me go ahead and get the presentation started. So, all right. So again, this material does not constitute an offer or solicitation to purchase securities. This is information only and should not be construed as business, financial, or legal advice. So let's talk a little bit about the agenda. So we're going to discuss this evening. We're going to discuss current trends and market conditions that make multifamily real estate investing an attractive option. Then we're going to go about increasing demand for affordable housing.
My wife, after your wife, one of the best of this was something.
And then we're going to talk about strategies for handling the uncertainty of the Fed and interest rates and all the stuff that's going on right now and what are some of the things that investors can consider in this type of market. And then we'll spend a little bit of time talking about strategies people can implement to use inflation to their advantage as it relates to real estate investing. But before I get into all this, I do want to spend a minute just especially for those of you who have not had a chance to meet yet, just to give you an opportunity to learn a little bit more about me and my wife and business partner. Allison, we are the co-founders of Red Fox Multifamily. And both of us, we have over 20 years of experience in corporate America in both the pharmaceutical industry and fashion industries, respectively. We have invested significantly in our formal education through receiving various different degrees and certifications, and continue to build up as we built our careers in corporate America, continue to build our minds and our abilities and skill sets as well. But in addition to that, we come from really diverse backgrounds, and we met in college, and we just have such a thirst for continuing to grow and advance and help others, and that's kind of how we got here to this real estate space. And I'll talk a little bit about that in a moment. But the namesake for our company, Red Fox Multifamily, actually is based on comes from Marist College, where the alma mater or the mascot is the Red Fox, and that is such an important place for us that we wanted to use that as the way that we could pay respect and honor to the place where we met and where so many of our great friends come from, and just continue to build on that. So that's how we came up with the namesake of our company. And what I also want to share with you guys is why we have invested substantially in our education from a formal standpoint. One of my favorite authors and speakers, Jim Rohn, famously said that formal education will make you a living, but self-education will make you a fortune. So what you guys are doing tonight and investing your time, about an hour to come here and learn and listen and participate and engage, is a part of that self-education. And I want to give you guys a big shout out for taking the time to do that. And from our perspective, that self-education that we've invested in is, in fact, in various different masterminds and coaching programs to continue to build up our knowledge and expertise and skill set on doing some of the things that I'm going to talk about with you this evening, and actually practically doing it as well, which I'll show you in a moment. And then one in particular, we've invested in the Michael Blank's Dealmaker mastermind and coaching and certification program, which we are a part of. And we're also a part of multiple other masterminds and coaching programs that are aimed at helping us become the best investors that we can be, and helping other investors to grow and protect their wealth as well. In addition to that, in this time I've been so focused and having so much success in this space that I became very passionate about this self-education and helping others, which is why we started this rapidly growing meetup that we have here, and are able to share this information with you tonight, as well as the hundreds of others that we have on our email distribution list that will be able to watch the recording back on YouTube. So again, thank you guys for taking the time out here. The other thing I want to be able to share with you is, I just want to make sure, can everyone see my screen okay? Okay, thank you very much for confirming. So just to give you a little bit of more background on us. So we're passive investors, and we're active investors as well. We have invested passively in over 330 units across various different major metro areas, from Atlanta to Houston, Texas, to Birmingham, Alabama. And we're also investing actively in many areas as well. In particular, we're invested actively in Dallas, Texas, and we invest primarily in multifamily syndications, as well as funds, real estate funds, and also we are going to be doing some land development for that, for some land that we own as well. So really exciting. What we're talking about this evening is not just stuff that we do in theory. These are things that we do in practice, and wanted to make sure that you all were aware of that, as well as we step into that. And as I mentioned, we have invested substantially in our education. When I mentioned the Michael Blanc program, Michael Blanc is one of the leading authorities in apartment building investing, and he has an outstanding education and training program that we invested in to help us grow our knowledge and expertise in this space. And with that comes mentors and coaches. And one of the people that is really been a rock for me in this space as I've continued to grow. And there is my mentor, Philippe Schuligan, who's pictured on the right. And both of these gentlemen have hundreds of millions of dollars of assets under management, and thousands of units under management. And so these are the types of people that we're affiliated with to be able to help us grow our knowledge and expertise and be able to come and share these insights with you as well. So let me get into the meat and potatoes, as they say, of tonight's presentation. So let's talk a little bit about the current trends and market conditions. So first and foremost, there is a war that continues in Ukraine, where it is causing a tremendous amount of instability and uncertainty in the region. But that also has some geopolitical influences in that it's also impacting things here at home, not just abroad. We also have a situation where the Fed continues to raise interest rates, and those all for the goal of helping to slow down the economy and slow down inflation, which at its height had gotten up above 9%. And the latest report that I've read is looking at about 6% inflation. And the Fed has stated, Jerome Powell has stated himself, that their goal is to get it down below 3%. And we're only not even halfway there. And so additional rate hikes, if you will increase. And so in addition to that, we have inflation, as I mentioned, and this potential for a recession to occur, and what's going to house it, and what's going to happen, and what about jobs? And our latest jobs report continue to see the economy continue to strengthen, while the Fed is trying to slow things down, and now there are additional signals that the Fed it may increase interest rates even more, and all these things. And how does that impact the housing market? And what are we going to do when we have this type of environment at hand? And then what about the housing market? As I mentioned, the housing market is really on a tenuous spot as well, because when you look at some of the headlines for what is happening, folks are not necessarily sure about the housing markets. Housing prices have increased dramatically over the past few years, especially during the pandemic, and with low rates and people being able to take advantage of those low rates and get into homes. But then as interest rates have increased, now we see a situation where not only are home prices that have been driven up so much by the demand and low supply, we have a situation where we're combining that with high interest rates, and that's making it very difficult for new homeowners to break into the spot. So what are they going to do? Where are they going to live? These are all big questions that need to be answered. And of course, with all of these things going on, and the combination of these things, just in recent news, as we've seen this week, whether you lived under a rock, or whether you're like me and don't necessarily stay plugged into all of the news, it's not hard to know that there's a lot of volatility out there in the stock market, and that there are banks that are collapsing and being forced to restructure, and the FDIC coming in to rescue these banks, and a whole host of other things that are going on. So this market environment, is just really volatile. And so one may ask the question, why do these current trends and market conditions make multifamily real estate investing an attractive option? Like Chris, you just said all this stuff. I want to sit on the sidelines, man. I don't want to be out there, with my money and risking it all. I want to just sit on it and leave it in the bank, and if we have a situation, and then when things get better, I'm going to go ahead and invest. And I'm here to tell you that from our perspective, based on all these things, I want to offer you some information to consider as you're going on your very own investment journey, to determine how you want to go ahead and proceed. But we are certainly very much bullish in this market, and see a lot of opportunity in the market. Some of the most savvy investors in the world talk about not only being able to make money and do well in strong environments, but also to be able to do well, was what I mean, in environments that may not seem as opportunistic as well. And so this is what I want to be able to talk to you about. So just transitioning here, one of the things, and I promise I have a point here when we talk about Maslow's hierarchy of needs. And for those of you who need to be reminded, Abraham Maslow talked about this idea of the hierarchy of needs. And this basically is a model that is highly influential way of organizing human needs, from the most basic of human needs to the most advanced. And so his argument is that the most basic needs must be met before people can move up to the more advanced needs. And the foundation of his hierarchy of the needs includes shelter. If you look at the bottom, physiological needs, and what that translates into to me and my investment philosophy is, really focusing on the from an investment standpoint on the things that people need, those most basic of needs. And in that case, in the context of this conversation that we're having tonight, a roof over your head meets that bar. And multifamily, as we'll look at here in a moment, helps to meet this demand and this need that we all have as humans. So let's talk a little bit about why multifamily real estate investing is attractive. So, well, I want to point out a couple of things here. So JP Morgan Chase did a 2023 commercial real estate report, and this report covered various different classes of commercial real estate, everything from retail to self-storage and other asset classes. Excuse me. For the purposes of this conversation, I'll summarize some of the key points that they stressed here. And I want to point out a couple of things. I talked about those geopolitical issues, and what JP Morgan reported on is that the U.S. is still experiencing the conflict's impact, and most notably, the resulting sanctions and supply chain issues have driven up food, shelter, and energy prices. And then when they talk about record high inflation in terms of the real estate prices, in particular within multifamily, which we'll drill down to in a moment, but rents were up in 2022, up to 7.5%. They were up, 7.5% from 2021 as of October of last year. And so the other thing that I wanted to point out to you here is that these rising interest rates, I talked a little bit about that. What is the threat of the rising interest rates? Well, the Fed even has talked about throughout the last year the idea of increasing interest rates into 2023, and they are sticking by their word. And so, what does that mean from to multifamily investors? Well, if you look at it, one of the things that JP Morgan Chase is saying is that this could negatively impact commercial real estate owners, but realize that there may be an upside for multifamily owners and investors, as higher interest rates may cause potential homeowners to remain renters for a longer period of time. And that's something that I want to make sure that we all talk a little bit about that. So when we talk about the cost of home ownership, and as I mentioned before, and that increasing due to these high home prices and high interest rates, which are forcing these would-be home buyers to rent, where housing needs are focusing on those B and C class properties. They offer a very attractive option for people who are looking to call a place home. And we'll build on that idea for a little bit more. But even more into that, when we talk a little bit about this, one of the quotes that I wanted to pull out of this article for you to see is really highlighting on a couple of things, I want to paraphrase this, but this in this report that JP Morgan published not too long ago, they talked about multifamily is currently the highest performing of all asset classes. And they talk, of course, about the growth and what they've seen over the past quarter, if you will, in period of time. But one of the things that I wanted to really stress is that they're saying that multifamily owners and investors aren't immune to the cost increases, but they can adjust rents annually, even monthly in some cases, to account for those market changes to keep up with those things. And we'll drill down on that in a little bit. So the war in Ukraine and the potential for a recession. So what is happening here is the multifamily investments provide, why multifamily is such a strong asset to invest in these types of markets is really because multifamily investments provide that stable cash flow and a potential for longer term appreciation, making it an attractive option during this time of volatility and uncertainty. So that the Ukraine war, I would say, has caused this instability and has influenced the cost of materials and impacting the development of new construction. So those folks that are looking to build apartment buildings or build housing, the material cost that is coming up to be able to do those things is increasing as a result of this. And as those costs are increased, easing it, there's no end in sight to being able to really end that or lessen that demand for housing over the next 10 years, because things are slowing down from a development standpoint, and in certain markets. And so how the war in Ukraine has a really substantial influence over this. I talked about the Federal Reserve increasing interest rates. And so multifamily investments really have an opportunity to benefit and profit from these increasing rates, especially when they can secure long-term fixed interest rate debt to purchase the properties. And in addition to that, if it's not long-term fixed interest rate debts, one of the many tools that savvy investors have in their armament is the ability to, with experienced operators especially, the ability to secure variable rate debt. However, in that variable rate debt, in this volatile, if you will, interest rate market, savvy investors and operators are able to get what are called rate caps. And those rate caps are tools that they are able to utilize to ensure that their interest rate, even as rates are increasing, does not go over a certain amount, making sure that they're protecting the investors and helping to ensure that they can juice the returns for the investors that they committed to and promised as a part of the investment that they have provided to them. So from an inflationary standpoint, when we talk about high inflation, As inflation increases along with the cost of the goods and services and strong demand, apartment owners are able to increase the rents to keep pace with inflation, all while the property is appreciating in value. And again, there's an asterisk next to that, right? Because we want to make sure that we're investing, as we are investing passively into these assets, that we're doing so in a way where we're partnering, of course, with people who we know, like, and trust, but also we're partnering with folks who are experienced operators and know what they're doing. And we're buying in strong markets. We're buying in markets where there is strong job growth, there's strong population growth, the demand for housing is significant. These are all things that, as investors, we stack the cards in our favor to make sure to ensure make it more favorable that these types of things that I'm talking about here with respect to the ability to increase rents to keep up with the pace of inflation at a minimum, and the ability for that property to appreciate in value over the course of the hold of that asset. Those are all things that, as we step into this type of investment, we want to be thinking about. When we think about this, why it's attractive to invest in this market, even during uncertain times, and especially with an uncertain housing markets, as I mentioned before, we've seen it. We've seen houses go up, we've seen housing go down. In fact, we sold one of our single family assets in the end of 20 of last year, of 2022, as we're recording this in March of 2023. And we got out. I remember that I got a message from my realtor, hey, you sold it right on time, because we were able to get our asking price. We were able to achieve that. And then just shortly after that, rates and we're increasing. And not only that, we were seeing a situation where housing costs were heating up as well. And there were, in markets, depending on where you are, there were a lot of competitive bids. In fact, I was speaking with someone recently who were saying, people are offering, tens of thousands of dollars, in some cases hundreds of $100,000 over asking price to secure properties at the height of this thing, and then to secure these properties. So that type of demand for housing and markets, combined with low supply, this drives up rents, because the laws of supply and demand. And so apartment owners are able to increase these rents to keep up with the market rents at a minimum. And that, because when people are priced out of not being able to purchase a home, and then when if they are trying to maybe rent a home, but then there's not enough supply, or the cost of that is not achievable for them, or in terms of the amount of income they want to contribute to that type of housing, that really makes apartments a very favorable asset or investment for that person to put a roof over their head, to connect that back to Maslow's theory that I started with at the beginning of the presentation. I talked a lot about the stock market volatility, and the headlines this week in particular have been remarkable. And it doesn't seem, even today, it doesn't seem like it's slowing. And for those of us who prefer to invest in real assets, these are not uncommon things. Really, we've seen this story before. In other words, where it's all good when things are great and riding high, and we can just sit back, relax, and enjoy whatever market that we're in. However, when things are bad, they are bad. And watching and listening to colleagues and friends who are looking to be able to retire, looking to be able to buy homes, or maybe help with their kids' college, or whatever the case may be, and watching them squirm as the market goes up and down and takes down their future along with them is something that is really not enjoyable for me to watch. And especially knowing what I know now, and that there are ways in which people can protect against that type of volatility. And so as these markets experience this volatility, investors really seek safety for their money. And multifamily provides this safety given the need that I stressed earlier. And so depending on who you ask, when we talk about what I keep talking about this need, right? Depending on who you ask, I was reading a report earlier from Money Magazine. They're saying that the housing shortage in the United States of America is between 2 million to nearly 6 million uh, newly built homes. But what the challenge is that experts are saying that this is a decades long housing shortage, and it's only going to get worse in the next year. And some of the top economists for home builders say that due to the rising mortgage rates, and this year 2023, the market is going to be weak. And from a policy expert perspective, they're saying that they're seeing housing underproduction in almost every corner of the U.S. And so when you combine that with the need of supply and demand, and how does that position multifamily apartment investors? It really positions them nicely to be able to try to supply that demand for housing that people need in this time of volatility. We also want to kind of talk a little bit about the favorable return profile that real estate investments, in particular real estate syndications, provide. And one of the main things that I like to stress, yes, real estate syndications offer cash flow. They offer tax benefits that hedge against inflation that I mentioned before, and that appreciation or opportunity for appreciation. One of the main things that I came to learn as I've been investing, is that Robert Kiyosaki, one of the world's most well-known authors and speakers, if you will, and on financial literacy, and the author of everyone on this meetup has likely read or heard of the book Rich Dad Poor Dad. He has a famous quote that he's saying, essentially, it's not how much money you make, it's how much you keep. And real estate, in particular, multifamily real estate, with its advantages and tax benefits and depreciation and bonus depreciation, and the ability to take advantage of some of those things, are really what position real estate as a really solid investment. And in particular, when we talk about the tax benefits in real estate, there are very few other asset classes that provide more tax advantages than real estate. And maybe oil and gas, maybe some other agriculture in some areas. But when you think about it and look at it, real estate investing offers some really great opportunities in the form of bonus depreciation, as I mentioned before, and being able to leverage that bonus depreciation in real estate that allows investors to deduct the full cost of the capital improvements in the same year the expenses incurred. That bonus depreciation is scheduled to be phased out, unfortunately, by the end of 2026. But this year, as investors, we're able to take advantage of 80% bonus depreciation. Last year was 100%, and it will gradually be phased out over the next few years. But those are still great opportunities for you as you evaluate different investments to take advantage of bonus depreciation and help to reduce your tax liability legally. And do, as Robert Kiyosaki was saying, not only the money that you make, but the money that you keep. Help keep more of your money through taking advantages of the real estate. And then, of course, the ability to do 1031 exchanges, tax deferred exchanges, which allows you as an investor to roll over 100% of your of the proceeds from the sale of an asset into another asset of like kind and be able to completely defer those taxes are unique benefits to real estate, which are really, really powerful. We also get to take advantages of some really great service providers in the real estate space and multifamily and syndications in particular. And that is in the form of professional management. Real estate property managers are really critical. Some would argue the most critical part to a successful investment is being able to have a very strong professional property management team in place to as a passive investor, and that is helping you execute the business plan. They are helping you deal with all the things that you, as a person who loves to invest in real estate, but you don't love dealing with the tenants and the termites in the toilets, or the three T's as people talk about. And you want to be able to allow the property management team to really take advantage of, or excuse me, to manage those things for you to help you get the most out of your investment. And so the operators that you partner with are really, the good ones are really focused on providing the best property management and putting that in place and installing it and holding them accountable to executing for the investors so that they can make that investment work for everyone and achieve the goals that have been set out. When we look at real estate syndications, and again why they are very attractive, when we have access to larger deals. And one of the things that really started to influence the shift in our strategy, my wife and I's strategy, from single family to multifamily. One is we thought we had to graduate, to multifamily, but we learned that we did not have to do that, and that we could partner with other investors to pool our money together to take down these assets. But one of the things that really influenced us is that when we were holding on to our rental property, we noticed that when that baby was vacant, it was 100% vacant, no cash flow. We were floating that vacancy until we were able to turn it over and place a new qualified tenant in that property. And multifamily, however, and this example here is looking at residential multifamily, but in large multifamily, the advantages are even greater. You're able to mitigate your risk in some ways, because if that property is vacant, one, two, three, 10 units, depending on its size of a 100-unit property, you're still bringing in adequate income to be able to address that vacancy that the property is paying for itself. And those vacancies, of course, will be filled to be able to address the need and continue to bring the income of the property back. But the vulnerability to 100% vacancy is much less when investing in multifamily properties as opposed to investing in single family homes. And so that is one important factor to consider as well. Now, I've talked a lot about the advantages of real estate syndication, but it's also important to be balanced and know that there are also risks involved in real estate syndications that everyone should be aware of. And one of the major risks that we can talk about is the fact that there is market risk out there. Market risk being that real estate values can be impacted by all these changes in the market conditions, such as the economic downturn, such as all the things that I stated earlier, the war, the changes in interest rates. For those investors, one of the things that you're seeing and hearing about right now in this space is for those investors or operators who did not, throughout the pandemic especially, secure fixed interest rate debt, or if they had variable floating rates, during this time, and now they are being pressured due to the consistent interest rate increases. They are being pressured to sell their properties because now the interest rates have exceeded, uh, have increased so fast and so high that the income that they were seeing from those properties when they secured the loan for their property with a variable interest rate at a 3 or 4% is now at a 6 or 7%, and that is increased, that is eroding away at the income from the property. This is really challenging those investors to hold on to those properties, and as a result, they're either forced to sell the property ahead of what they had projected, and potentially not being able to achieve the returns that they had projected for their investors, or worse, they're not achieving any returns, and they are doing capital calls, meaning that they're looking for additional income from their investors to be able to address the gap that they have in income, and be able to buy a rate cap, or perhaps refinance out of the loan into something else. But these are very challenging times, and this is a very real risk that investors need to be wary of. There's also operational risk. And what I mean by that is real estate investors require active management that syndication group or team that you're partnering with. You want to make sure that they have experience and that they have the best property management, asset management team in place to be able to optimize your investment and lessen the risk of your investment by ensuring that they know what they're doing, and that that your investment dollars are in good hands, as they are making sure that the property is being and the business plan is being executed as intended, and the returns are following. The other thing with real estate syndications, and I get this question a lot from investors that I speak to, because most investors are used to the traditional way of investing in stocks, bonds, mutual funds, and with a financial advisor who you could speak to and say, "Hey, I want to get my money out, and in a few keystrokes, in a maybe as fast as a couple of hours, or long as a half a day or day, you can have your money wired to you or put into an account, to be able to have that immediately available to do what you want, when you want, and how you want to use it." Or with even these e-trades and apps that you now can do, people can pretend to be stock traders from their phone or their desktop computer. The immediacy of that exchange and being able to do things is really embroiled in their minds. However, on the real estate side of things, I always tell the investors that when they are looking at these investments and they're putting them forth, they really should not consider that money being available to them through the duration of the hold. For that 3 to 5 years, typically are the types of assets that we invest in. That money is illiquid during that time, and that you're going to receive cash flows from those properties, which are certainly benefits over other investments, whether they're monthly or quarterly cash flow distributions or dividends being paid out to you. You're also going to be able to take advantage of the tax benefits as you file your K-1 with your tax provider, service provider, to be able to help you, as we were discussing with your tax situation. Also an advantage, but to be able to take your initial principal investment out, there's not something that is typical. And so if you're investing in these types of deals, be mindful that your money is tied up in that investment for the duration of that project, and that you should certainly look to make sure that you are aware of that. And then finally, from a risk perspective, mitigating this risk is certainly something that investors can do. And this is a very short summary of some of the things that we can do as investors. It's not an exhaustive list, but it's some important things to look out for. And I talked a little bit about them earlier. You want to be partnering with experienced operators who have a track record, who've done this before, who know how to navigate through these situations. And you want to be able to have, know that they have a strategic approach to what they're investing in and how they're investing in it. These are things, what is their business savvy? Are they kind of flying by the seat of their pants and they don't understand how they're going to achieve this, and they just see all the nice glossy numbers? Or is there really thought and strategy behind how they will be executing the business plan, that resonates with you, that gives you confidence in what they're doing and how they're doing it? And then your job as a passive investor really is to be able to conduct that due diligence. Speak to these investors, get to know them, join their meetups, go look at their website, speak to them on the phone, schedule time with them. These are things that they all want to do, to be able to connect with you. And even if it turns out that, hey, you're not really driving with that individual, but you've taken the steps and the effort to be able to get to know them and connect. And I believe 9 times out of 10 that you are going to be really impressed with the people that you interact with in this time. I have come across so many great people in this space, and I've been real I'm so grateful to have been connected to so many people to help me learn about this space and expose me to something, and put me on a path that is different, and not have to be 100% exposed as I was previously to the whims and woes of the market. And being able to diversify my portfolio has been something that is really important to me. And so with that, I want to just wrap up by just offering a couple of things. So if you enjoyed or liked what you saw this evening, one of the things that we're doing is we are looking to have you join our investor club. And this investor club really is just simply means that you will be on our list to not receive helpful information like what we shared tonight, about multifamily real estate investing, and as well as gain exclusive access to deal opportunities that come across my desk as I have built relationships and partnerships with operators throughout the country in strategic markets, that I can help connect you to these deals to help your real estate investing journey and get you into some of these solid projects and out of the volatility that we're all seeing in the market today. And in that, you may be able to experience some of those potentially lucrative returns. And you have to know that joining the investor club, this simply means that these are first come, first served. And typically, for those who are not familiar, the minimum investments are around 50K, and that can include that can include your utilizing your self-directed retirement accounts, whether that is your solo 401k or your self-directed IRA. And if you want more information about that, in fact, I have another video on our YouTube channel, which you will have access to, that talks about how you can invest your retirement funds into real estate to help you diversify, as I talked about this evening. And there's so many other ways that we can talk about how you can invest in these types of assets to really diversify. But please do reach out to me and joining our investor club. And the way you can do that, or one of the things that you can do if you want to speak with me and connect and just get to know me a little bit. I enjoy talking to people about real estate investing. It is, my passion, one of my passions that I have in life. Please do reach out to me and connect. And you can just simply, type this information in your URL and book a time, and we can set up a few minutes to talk. And so the final thing that I'll say, and then I'll open it up for Q&A, is that the references for the presentation that I used tonight can be found on the screen here. And what I'll do is when I publish the recording and the slides that I use in PDF to all tonight's attendees, you'll be able to research those references yourself and take a read of them if you'd like. So I want to thank you all for taking the time to speak with me today. And then now I'll take us off of, I'll stop presenting and I will take us off so that we can have a Q&A. Hey, Chris, what's going on, man? Hey, Yolanda.
Hey.
What's going on, buddy?
What's up, Chris?
How you doing?
Good, buddy. You?
I'm doing great, thanks. I'm going to stop the recording, and so that we can go ahead and have a conversation. But I just want to thank everybody as I wrap this recording up. Thank you for joining our meetup this evening. I really look forward to connecting with you. Please do reach out, and we'll see you next time. Take care.